Hello viewers, once again welcoming to you all to this educational channel. Today's topic is a final account of a sole proprietorship business. A sole trader like a partnership firm or company also prepares his final account at the end of accounting year. Final account, as you know, consists of three parts. They are trading account, profit and loss account, and balance sheet. Trading account is prepared to ascertain either gross profit or gross loss. Gross profit, which represents excess of sales over cost of goods sold. Conversely, gross loss, excess of cost of goods sold over sales. On the debit side of trading account, opening stock, purchase, and direct expenses are recorded. On credit side, sales, closing stock, goods destroyed by fire are usually recorded. The difference of trading account is a gross profit or gross loss, as I already mentioned. Similarly, profit and loss account is prepared to find out net profit or net loss. The expenses which are debited to profit and loss account are of the following nature: management expenses, repairs and maintenance expenses, selling and distribution expenses, financial expenses, abnormal losses, expenses incurred but not paid out partly or fully during the current year, like salary outstanding, rent outstanding. Similarly, on the credit side, these are non-trading income and abnormal gains, profit on sale of machinery, profit on sale of fixed assets are abnormal gains and are credited. Like income accrued but not received partly or fully, in like interest accrued but not yet received, so this is a income and recorded on credit side of profit and loss account. Income received in advance, showing income received in advance, showing by way of deduction from respective income. And the third part, that is the balance sheet, which is a position statement or a balance sheet, is prepared at a particular point of time. It discloses the assets owned by the business and the total claims of the owners and total claims of outsiders against the assets of a business at a particular point of time. The sum of liabilities and capital should be equal to assets. Therefore, it shows the financial position of the business. It helps to ascertain the solvency, liquidity, and financial soundness of the business. So normally for preparation of a balance sheets, we have two methods. There are two prominent methods to prepare the balance sheet of sole proprietors and partnership firm. In case of balance sheets of a company, there is a specific pro forma prescribed by the Companies Act. The two methods are permanence method, liquidity method. So number one method is permanence method and number two method is liquidity method. So I will explain you with the help of illustration about the permanence method and liquidity method. So all this about to understand about the final account, let us solve one problem. Problem is on the screen, which is taken from a previous year exam question paper. So here is the problem. Following are the balances of Mr. David as on 31st March 2023. This is the financial year. It starts from 1/4/22 and ends on 31st 3/23. This is the financial year accounting period, and we are preparing the final account of this accounting period. So this is the debit balance or and this is the credit balance or trial balance. And what are the assets and liabilities, income, expenses are given in the question. Let us see first one by one, then we will solve this problem. First we see the question thoroughly. So this is a land and building, this is a land and building, value is given 50,000 and it is asset. Purchase value is given 3,16,700 and returns, this is the 2,500. This returns is a debit side, so debit side returns is deducted from the sales and credit side returns is deducted from the purchase. So stationary profit and loss account item, cash at bank assets item, and on credit side sales value revenue from operation 4,68,580, interest on investment as it is other income, this is a non-trading income 900, and a 12% loan, this is the 12% loan was taken on 1st April 2022 at the beginning of the financial year. The amount of loan was taken for business purpose and the amount is 50,000, and this 50,000 interest is payable on this 50,000 and at the rate of 12%, and this 12% loan is, this is also called a hidden adjustment. So we have to calculate the interest on loan. This is the 50,000, 12%, 1 year it will be 6,000. Okay, so these are 6,000 effects we have to show in our profit and loss account debit side. Loan is taken and interest is payable. Okay, so next page, on the debit side, a discount 2,000, profit and loss account items, sundry debtors, assets, postage, profit and loss account debit side. Since this is given on the debit side, so it will appear debit side. Salaries, debit side of profit and loss account. Carries is this carriage on purchase, this is a direct expenses. So direct expenses which are incurred for purchasing of goods or manufacturing or production of goods. And here advertisement, it is a selling and a distribution expenses debited to profit and loss account. Interest on loan, this is the financial expenses, and that just now I told you that 12% 50,000 loans. So total amount I told you that it is 6,000. Total amount is 6,000, and out of 6,000, 3,000 is already given to the lender and the remaining 3,000 is outstanding. So this type of adjustment is called hidden adjustment. So then we have to show 3,000 add due on debit side of profit and loss account, add due interest, okay, due 3,000. So total amount shall be debited to 6,000. And furniture is your assets, it will appear on asset side, non-current asset, cash in hand, current asset, so it will appear on asset side of balance sheet. Motor car, it is non-current assets, investment, non-current assets. So drawing, this is the amount withdrawn by the proprietor to meet his domestic expenses, household expenses, 10,000. This will be deducted from his capital account in the balance sheet. And stock, the date is given 1st April 2022. It represent opening stock. So opening stock, so we write on debit side of trading account. The first item normally we write on debit side. And wages is the direct expenses 10,000 debited to trading account. And machinery, non-current assets, it is on asset side of the balance sheet. So these are the, and this is the capital. Sundry creditors, liability, return. So this return 3,700 shall be deducted from the purchase. That is, purchase returns we will get the credit side and sales return on debit side. Or return is also called a return outwards, and credit side return is also called return outwards, and debit side return is also called return inwards. And now discount, this is the financial income to 1,290 credited to profit and loss account. Apart from this trial balance, some adjustments are also given here. The opening, this is the on 31st March 2023, so it is closing stock. And this is the 1st April 2022, this is the opening stock. It is, this stock is at the beginning of the accounting year, so opening stock, and this stock is at the end of the closing year or at the end of the accounting year, so it is a closing stock. All right, so motor car and furniture to be depreciated by 10% and 5% respectively. And this is here the motor car, and another is furniture, and the furniture balance is here, this one. Adjustment number 3. So adjustment number 3 here, a stock worth rupees 15,000 destroyed by fire on 20th February 2023, in respect of which the insurance company claims admits a claim for rupees 8,000 only. So 15,000, out of 15,000, insurance company compensated by 8,000, so remaining is 7,000 is not recovered, so it is a loss. So the treatment of this, 15,000 will appear on the credit side of trading account, goods destroyed by fire, and 7,000 will appear on debit side of profit and loss account, loss on goods destroyed by fire, and 8,000 will appear on the balance sheet asset side, insurance claim asset. So this 3 effect. Then provision for doubtful debts to be maintained at 10% on debtors and a discount on debtors 5%. And unpaid, that is the outstanding amount of stationery 1,000, salary paid in advance rupees 2,000 and paid in advance. So it is to be deducted, it is to be added. And wages include a sum of rupees 1,000 spent in erection of a machinery. So at the time of installation of machinery, any expenses incurred, that expense are to be capitalized. That means that expense shall be added to machinery account. So this 1,000 will be deducted from wages in the trading account on debit side, and this 1,000 shall be added to machinery on in the asset side of the balance sheet. Okay, this is the questions so that I explained you. Now let us see its solution. The solution is here on the screen. Trading and profit and loss account of Mr. David for the year ended 31st March 2023. So debit side, and this is the credit side. Okay, so opening stock, as I told you in the question, it is given 68,480 purchase and less returns in the credit side of trial balance. So return values 3,700 given in the question, 3,700, and the balance is 3,13,000. And carriage where 3,000 given in the question, 3,000 value. Wages, as I explained you in the adjustment, so total amount of wages given in the question 10,500, and in adjustment 1,000 is spent for erection of machinery. So this 1,000 is to be deducted from here. This wages 10,500 minus 1,000, and balance is 9,500. Total wages 10,500, and out of 10,500, 9,500 is manufacturing wages or wages paid for manufacturing or production of goods, and 1,000 wages amount 1,000 is paid for installation or for set of machinery. So wages paid for production purpose or manufacturing of goods are to be debited to trading account, and machinery wages paid for installation of machinery or setup for machinery, that cannot be debited to trading account, so it should be added to machinery account. Here this is machinery 16,000 and wages for erection 1,000, 17,000. So this 1,000 is added to machinery and it is called capitalization of expense. Now here on credit side, sales given in the question, and less returns, so it is on debit side of trial balance 2500, and the balance obtained is 4,66,080. And in adjustment number 3, goods destroyed by fire is given in the question. So total value of goods destroyed by fire is 15,000, and closing stock is given at the adjustment number 1,60,000. So this, the total of this 6,41,080, and the balancing of trading account here, the gross profit CD is the difference of this. The difference of the trading account is 2,47,100. And now next step is profit and loss account, and this profit and loss account balance 2,47,100 on credit side of profit and loss account. Now, as I told you that the goods destroyed by fire is a 15,000, and out of 15,000, 8,000 insurance company has admitted, and the balance 7,000 is not admitted, and it is represent loss, and this should be written on debit side of profit and loss account. The first item here, loss on goods destroyed by fire, 7,000 rupees. Okay, then in stationery given in the question, it is 8,500, and adjustment number 5, unpaid amount of stationery is 1,000, so total 9,500. And just I told you in the question that interest on loan, how to present this, 3,000 is given in the trial balance, and still 3,000 is outstanding and due this 3,000, so total 6,000 of interest on loan, and total expenses on interest on loan is to be debited to profit and loss account, here this 6,000. I hope you have understood that how it is calculated. On this 12% of rupees 50,000, it comes 6,000, and out of 6,000, 3,000 is already paid, and still 3,000 is unpaid. So this 3,000, and it is written as due, outstanding. And now discount is just simple, 2,000 given on the debit side. If it is a debit side, you write down to debit side. If it is on credit side, you write down on credit side discount, and the discount is given on both the debit side as well as credit side. On the debit side, it is given 2,000, and on credit side, it is given 1,290 in the trial balance. So this is 1,290 rupees given here. All right. So then interest on investment on credit side of the trial balance 900, it is given. It is a non-trading income. So next, and now provision for doubtful debts, 6,400. So in the given question, this 6,400 amount calculated on the balance of sundry debtors, and when provision for doubtful debts amount we calculate using the balance of sundry debtors. Now if you see the question here, you will see this sundry debtors 64,000, and in the question is given 10% provision is to be maintained. Now where it is, you see this one, provision for doubtful debts is to be maintained 10%, this 10%. So then the 64,000, 10% is 6,400, this one. Understood? This one 6,400. Okay, and remember that now you say the 64,000 balance of sundry debtors is given 64,000, and 10% is a provision for doubtful debts is to be deducted 6,400. So when you deduct this 10%, the balance amounts you will get 57,600. And this is the sequence. This is the Sunday debtors balance. First you deduct the provision for doubtful debts or bad debts 10%, and the balance of 10, 57,500. On this balance you calculate the discount on debtors. So it is given in the question, so I will show you here in adjustment number. This is, so there are two things. One is here doubtful debts. This is doubtful debts, you have to calculate at the rate of 10%, and thereafter you have to calculate the discount on debtors. This is also provision for discount on debtors at the rate of 5%. And which one is to be calculated first? The first you have to calculate doubtful debts, and after deducting the amount so calculated, the balance which you get, on that balance you have to calculate discount on debtors 5%, and it is shown here on 57,600. 57,600, if you calculate the 5% on balance, 5% provision for discount on debtors, the amounts you will get 2,880, and it is written here 2,880 rupees. And thereafter the postage given 2,195, and salaries 22,000 is given and paid in advance. So amount paid in advance 2,000 is to be deductible, because 2,000 is advance payment. So any expense, any amount paid in advance, any amount received in advance are not to be considered as expense of that particular year, and that is why it is to be deductible. So out of 22,000, 2,000 paid in advance. So 2,000 is not expense of this particular year 2022-23, and that is why it is there. So this particular year expense is only 20,000. So actual expenses, whether paid or payable, shall be taken into account. Actual income, whether received as well as receivable, shall be taken into account. Like this is the amount due interest. Actual paid 3,000 and 3,000 is still payable. So paid as well as payable are together taken into account. And similarly, one is here stationery. Our total 8,500 paid and 1,000 is still payable. So paid as well as payable together. So whole paid as well as payable amount will be taken into account while calculating the net profit as well as gross profit also. And now here the depreciation and advertisement expenses is given in the question. It is a 16,000, so it is 16,000, and a depreciation on motor car, it is given 10%. So motor car value 10% of 16,000 is 1,600, and depreciation on furniture, so it is given in the question. It is a 5%. So by mistakenly I have taken here 10%. So it will be 5%. So 5% of 8,000, it will be 400. So 400, and that means our net profit figures will be increased by 400, 1,74,915 plus 400, 75,315. So our net profit figures will be increased by 400. So slightly corrections is needed here. 1,75,315, because here by mistake I took 10%, whereas it is given in the question 5%. So 5% of 8,000, it is 400. So then net profit will be increased by 400 and 1,75,315. The net profit which is calculated from the profit and loss account is 1,75,315. Now the balance sheet on the liability side, capital account given in the question 80,000 and add net profit 1,75,315, add and total 2,55,315 less drawing 10,000 and it is given in the question. So balance is 2,45,315 is the capital balance, and the loan amount 12% loan amount, total value 50,000 and interest due 3,000, 53,000. Thereafter sundry creditors 63,100. So this sundry creditors balance is available on the credit side of trial balance, and unpaid stationery, it is an given in the adjustment rupees 1,000, first adjusted in profit and loss account and subsequently it is a liability payable amount 1,000 and written on credit side. And on asset side, land and building 50,000, furniture 8,000, less depreciation 400, so 7,600, motor car depreciation minus 14,400 balance, and machinery 17,000. Investment debit side of trial balance 12,000, insurance claim 8,000, salary paid in advance 2,000, and this is the sundry debtors balance is adjusted in this manner in the balance sheet. Sundry debtors minus provision for doubtful debts minus provision for discount, and this balance, the net balance, it is also called a realizable value of from sundry debtors in 54,720 after deduction these two items, provision for doubtful debts and discount on debtors. Remaining balance, closing stock 1,60,000, cash at bank 30,700, cash in hand 5,995. The sum total of asset is 3,62,415 and the sum total of liability side is 3,62,415. So well viewers, all of you watch it, like, subscribe and share with your friends. So the examinations point of view, very important problem, so all of you must watch it till the end. Okay, thank you very much.